Hello, welcome back to the InsurTech podcast. Zoya here, and this week we've got Tim Quayle, CEO at OneAdvent, joining Matthew once again behind the mic. You may remember Tim from his debut episode last July, where he shared how OneAdvent helped Cowbell launch in the UK. This time the conversation goes even deeper into what it really takes to launch and scale an MGA in today's more demanding insurance landscape. So what defines a successful MGA in 2025? Can founders still afford to move fast and break things, or has the industry really grown up? If these questions interest you, you can also speak to OneAdvent in person at our MGA half-day event on July 15th. It is shaping up to be one of the biggest UK gatherings, focused entirely on the delegated authority market this year. Anyway, grab a coffee, a tea, settle in, it's a Sunday morning, and let's dive into the conversation.
Tim, great to be talking to you again. We talk quite a lot. It's actually just delightful to have the tape recorder rolling, so to speak. And I think it was your first podcast back in July 23 when we did the first recording with you. Is that right?
It was, with Matt Jones from Cowbell, talking about how we'd helped Cowbell launch in the UK.
I was going to ask you how your podcasting was, but I should probably ask you how Cowbell's got on as well, as you mentioned it.
Cowbell are doing well. I think UK cyber is a tough market at the moment, right? It's a market that's seen a lot of softening, and so it's a competitive market. But Cowbell have got a good product. But I think, like we find a lot in MGAs, everything often takes a little bit longer than we'd all hoped. You've got to be a bit patient, right?
Lesson for life, isn't it? Well, we're going to come back to that. It's going to be a big theme of what we're talking about: experience for early stage companies, MGAs, InsurTechs, and what defines the survivors. So just for those who aren't familiar with Advent, just a brief reminder. So you're a London-based MGA incubator. You're empowering entrepreneurial underwriters to launch and scale their insurance businesses. You provide regulatory authorization, compliance, FCA, lawyers cover holder infrastructure, premium processing, actuarial, machine learning tools, and office support, all wrapped up in a flexible, pragmatic platform designed to accelerate growth and innovation. Well, that's at least what ChatGPT thinks. How does that sound?
It sounds pretty sensible to me.
Good. Well, we've got an event coming up you've been very good enough to sponsor on the 15th of July, which will be a few days after this goes live. Still time to register, but looking at registrations now, it's filling up fast. Really talking at that about part of what we're talking about today with some of your panelists. But as you sort of alluded to earlier on, with entrepreneurs, by definition, really, not all businesses succeed. You've been going 25 years, but you've certainly been scale up on that. But what's your sort of main takeaways from how you've seen businesses evolve in the last, really since InsurTech was coined as a phrase about 10 years ago, and sort of lessons to be learned from that?
My personal experience in insurance is probably that time frame as well, right? So it's probably those last 10 years. And I came into it when, if you had a sort of half credible plan with plenty of tech buzzwords and a team sheet with some reasonable CVs, that you take that around the market and you'd have funding and capacity within about 2 weeks. It's completely changed now. We've learned a lot through that. We were really focused on that sort of InsurTech side of the industry initially. Part of that was because a lot of our team come from outside the insurance industry, so we were able to kind of talk the same language and relate with some of these sort of early stage tech businesses that were talking about speed to market and pivoting and test and iterate and fail quickly and all these kind of startup type buzzwords. And we supported a number of those, and very few of those that we supported are still around today. We've sort of matured and grown as that part of the industry has, and learned a lot along the way.
That is just a part of how investment and starting a company works. I was talking to someone recently, he's in his 80s now, been investing for like many decades, and he says it's about the worst time he's seen it for challenges of fundraising and company failure. Unfortunately, it's just the nature of where we are, but it also does mean that those that survive are fitter and stronger going forward. When we spoke before, you said the world has grown up. What were you thinking about when you said that?
I actually think there's a huge amount of money to deploy in our industry at the moment, but they're looking for much more grown-up plans, backing much more experienced teams. And so there's a huge amount of cash out there for businesses, both early stage and established, but it's not that kind of speculative, let's have a punt, we'll back half a dozen and hopefully one of them will work type investment. It's much more about established individuals, credible plans, been there, done it before, that kind of more traditional type startup. I think we've grown up a lot as a business, and what we're looking for in terms of the teams and plans that that we support. We're a service provider, so you could argue that to a certain extent we're there to provide service and get paid for providing service, but actually we put a huge amount of effort and resource into the teams and plans and businesses that are on our platform. And so it really is about picking the winners, because what we want is long-term relationships with these businesses where we can support them as they grow. We spend so much time on those early stages that actually we've got to be quite selective. And what have we learned? I think insurance experience is a huge part of it. I'd say to anyone, don't underestimate how important that is. I think those coming into our industry and trying to innovate without really understanding the industry and how it works and operates and where it's got to today, I think they've got a pretty hard or a challenging route ahead of them. I think it's very naive to come into our industry and think we're going to change it all. It's broken. It's 25 years behind in tech. For me, radical change doesn't work. And we haven't seen any of those businesses succeed. The businesses that we've seen succeed are those that really understand parts of the industry and focus in on a bit of it and say, look, we're going to make that bit 25%, 30% better, 40, 50% better. They're the businesses that get some traction. It's not the guys that are come in saying, let's rip up the playbook and go again, because fundamentally, it's an industry that's been around for a long time and developed this way for good and bad reasons. But it is what it is. If you fight everything, you're never going to succeed. You need to pick your fight.
It's absolutely true. It's this idea of disruption, healthy in some level, but I think its history has shown, whether it's retail or commercial insurance, that you can't come in and disrupt it. And it's working around the margins. I think one of the comments you made, which I quite like, was the best way to fight the status quo is to understand the business as it works. And then you figure out the bits that are sticky and don't work and sort those out. But I guess the other part about knowing insurance, when you talk about you need to come from insurance, there's a few parts to that. One is just understanding the workflow we've talked about. But what other elements do people who had an experience in insurance, what else do you find they benefit from when they decide to go out on their own or work with somebody else that's founded a business?
I think having a good understanding of the different stakeholders and how all that interaction works, a huge part of what we do is we're trying to bring multiple different parts of the industry together to get businesses launched. And you can't do it with one or two components. You sort of need to bring 3, 4, 5 different bits together at the same time. And so I think really understanding the different stakeholders and how that interaction works, understanding that things take a while and understanding where you can push to get things done quicker and where you actually have to just step back and say, look, that's a feature of the industry. We've got to play the game. We've seen a number of businesses come in and just push at everything and get incredibly frustrated and also frustrate the other stakeholders and use up all their sort of credits early doors. And then as things don't quite go to plan and you pivot, used up a lot of that goodwill early doors. And so I think having that experience to know where are the areas that you can really try and accelerate and push stuff, and where do you need to just respect where those stakeholders are coming from, how those businesses operate. And I think that only comes from being in the middle of it, having experience of this and seeing businesses come together and launch. And one of the first questions we ask on every opportunity we see now is, what is the experience in the team? And that gives us a real flavor for what's their chance of being successful, and B, how much hand-holding are we going to do? Part of what we're there to do is hand-hold, but we want to be hand-holding on the bits that really make a difference, not necessarily step by step through every part of that process. So
two things in there I think it's worth touching on or just reinforcing it. You didn't say they used the word specifically, but you sort of implied it. The collaboration and generally, I think around London as a community, the friendliness or willing to support people is really strong. But as you said, if people give advice or suggestions and people don't listen to it, then you've blown your chance. And I think there's an interesting tension as an entrepreneur or a founder of a company, and you read the biographies of Elon Musk or Steve Jobs or something. He's like, we're going to go out there and break stuff and do it differently. And I've got a vision and I'm not going to stop until I get that vision. And that doesn't work in insurance, and for all the reasons we've talked about. And so the successful people building businesses actually have to hide that ego and listen and take the feedback. And if someone says, don't do it, then there's a reason why they're saying don't do it. And you have to kind of recalibrate and put the energy onto something else. Is that a fair reflection of what you said?
I couldn't agree more. And I think, don't get me wrong, I'm not suggesting we shouldn't be trying to push the industry forward and innovate, but I think understanding where those stakeholders are coming from and being willing to work with them and collaborate to get to where you want to get to, that's how our industry works. That's how stuff gets done. It's not about pushing people faster than they're comfortable moving. It's not about trying to get people to make decisions. It's about collaboration and working together. And where that works, you see some incredibly successful business. And where we see it, generally that interaction between underwriting MGAs and capacity, right? That sort of key relationship there. And where that relationship works really well.
I want to come back to that capacity and also this distribution in there we should talk about as well. What about timing? You mentioned before about the reasons some of these companies fail is timing. The insurers are notoriously slow at making decisions. What's your advice to people looking at starting up an MGA? And timing kind of means access to funds as well, so you don't run out of money because things happen slower than you expected.
You and I both have kind of first-hand experience working with early stage businesses that are raising funds and trying to give themselves enough runway, and often underestimate that. On the timing piece, I think regardless of how experienced you are and working with fantastic partners, you have to bank on it taking twice as long as you think it might. And I think if you go into that and make sure that you have the resources, and that doesn't stop you trying to achieve it in half the time, but I think you have to go in with that mentality, because that is our industry. And we see lots of people come and say, we want to launch a business, we want to be live in 3 months' time. And the first thing we normally say to them is look, in our experience, that's not realistic. Now, we'll help you as much as we can to try and achieve that, but you need to make sure that your assumptions around cash flow and funding and everything support a much longer time frame. I think you can shortcut some of this. A lot of that mobilization time is getting all of those various stakeholders comfortable with you and your idea and how you operate. And so the more robust business you are, an operating model and technology stack and experience in the team, the more you can package something up in the way that insurers are used to seeing it and say, look, here, we might be an early stage business, but we have hugely experienced people and we've got good proven technology and we've got a robust operating model, and we're working with a platform partner who is providing us with a lot of the kind of infrastructure and sort of back office capabilities that you would expect from a big grown-up business. So you can sort of fast track this by presenting yourself in a way to insurers and other stakeholders that help them to tick those boxes really quickly, but it still takes time.
You mentioned there's money there for funding. Is there also money there for providing capacity, for underwriting capacity as well to back companies?
It's still tough for new products that there isn't a track record. It's still very difficult to go and get capacity providers who will support something completely new without the data to support it and without the confidence that it's going to grow to be of a size that justifies that sort of internal investment of getting their heads around it, getting comfortable, going through all their internal approvals. And so I think new product innovation still very difficult. In terms of backing MGAs and backing sort of proven underwriting teams with established distribution, I mean, there's some fantastic MGA capacity partners out there who see MGAs as a core part of their distribution strategy, and the guys who do it really well and have invested in it have a huge amount of capabilities and understanding around MGAs and what makes a good MGA, and so that inevitably fast tracks launch period as well, because you're working with experienced teams who work with lots of MGAs. They understand what a good operating model looks like. They understand what tech's out there. They understand how you're actually starting from a point of really understanding what a good MGA looks like. And so, yeah, it makes it so much easier for them to sign that off and support it. We probably work with about 30 capacity providers across about 15 MGAs now, and a mixture of Lloyds and non-Lloyds. And we work with capacity providers that pretty much all they do is MGAs, and they have whole teams dedicated to supporting and getting these opportunities live. We deal with capacity providers that maybe aren't as experienced. There's quite a range there.
You talked already about product innovations at different types of coverage, but I've heard you talk about innovation in distribution. It'd be kind of interesting just to know what you're seeing or what potential there is there for innovation in distribution.
We've looked at businesses trying to innovate and develop new products. We've looked at businesses taking existing products and new distribution, and we've looked at MGAs who are looking for new distribution and new products. The one thing I'd say is new product, new distribution, that's a tough play. That probably shouldn't be core to the strategy. Those that we've seen be successful are those that have a core business that functions and works already, and what they're trying to do is iterate around the edges to improve that experience or to reach a different customer base.
On that topic, there was a lot of discussion about embedded a few years ago. That seems to have gone quiet. Is that because embedded was actually just a name for something that was already happening and it's now gone back to happening, or is it the concept just itself shifted or not as exciting as it once was expected to be?
We've got a big embedded MGA carrier on our platform who do some interesting products to some of the big ticket vendors in the UK and Europe. What's happened with embedded is that the big boys have really doubled down on it, where there was sort of more innovation a few years ago. I think some of the bigger carriers who are very experienced in that personal line space have worked out how they can provide that embedded offering direct into distribution partners. And often these products, the margins are quite tight. There's a lot of distribution costs. And so I think it's a real advantage having a balance sheet as well. And so I think sometimes it can be challenging to have an MGA in the mix when you've got really tight margins and you're having to compete at the front end for distribution costs with some of these big distribution partners. Often an MGA is another mouth to feed. The economics of that can lend themselves to the balance sheet businesses actually accessing that business directly.
And then talking about other themes, of course, we need to talk about AI in some form, generative AI, agentic AI. Maybe I'm missing it, but I don't think I've seen any big insurance MGA plays built explicitly on the back of AI. I mean, lots of companies put AI on their name. They kind of figured that one out, but not truly at the point where they can raise $100 million to have an insurance play. Have you seen anything like that? Am I just missing it? Or is the investors kind of sussed out insurance is probably not the best place to make those bets?
Not really, not yet. I think we're just beginning to see a few interesting businesses starting to play with AI. We've got an interesting reps and warranties MGA that is focused in on the smaller end and smaller transactions, SME transactions, which I think traditionally the time taken to underwrite those transactions has meant that it's almost uneconomical to provide that cover. They're trying to collate all of that data and information and start utilizing technology like AI to streamline that underwriting process so that ultimately it becomes an economically viable proposition. And their whole hypothesis is we need to get out there, we need to get trading. We recognize that for the first few years, that's probably not cost effective, but we need that base of data to then start doing smart stuff. And so their view is, well, look, year one, it's going to cost us this amount to underwrite and the premium is going to be this amount. By year two, it's the gap's different. And by year three, we're making a significant profit because actually the technology is developing and helping us in that underwriting process. So we're beginning to see a few interesting businesses starting to play with these kind of tools. But I wouldn't say we haven't seen anyone who's built a business around AI and really started to get traction. We're seeing, and this reps and warranties business is a great example. This is, in many respects, the traditional underwriting play, a very well-established underwriting team who've been doing this for years, who have distribution and relationships. And what they're doing is they're taking that business and then starting to use technology to make it smarter and more efficient.
Now, I'm going to expose my ignorance because I could take a guess at what reps and warranties are, but rather than embarrass myself, can you just explain for those like me that don't understand what it actually covers?
Now you're going to put me on the spot. My best example of this is we did a management buyout about 18 months ago. We went through a big transaction. When you're selling a business, you have to state a load of information to the buyer and you have to warranty that. And sometimes it could, for various different reasons, be difficult for the buyer to get comfortable with your warranties. And it might be that maybe you haven't been in the business long enough to really understand what are all the scenarios that could be there for a future buyer. And so one way that you can overcome that is you can essentially buy an insurance product against it. And so the way those insurance products are underwritten by lawyers who understand M&A transactions, and they get into it and they go through all of the documentation around the transaction, the share purchase agreement, the warranties. They look at the business and they determine what is the risk attached to that, and then they'll underwrite that. And you can then buy that policy, which if something you said turned out not to be right, then the policy would kick in and protect the buyer of the business. And essentially it's a product to help the sale process go through. So when you get stuck on certain points, you can rely on insurance to help you move past that point, knowing that there is that fallback position in the future.
That makes complete sense now. It actually reminds me of another insurance, which I think is characteristically British, where sometimes if you buy a house or you're the biggest house in the village, you've got responsibility for repairing the church roof, and you can buy an insurance that actually covers you in case the roof blows off and you've got to pay insurance on that. But yeah, marginal insurance or sort of niche insurance is actually very profitable.
And they help the underlying transaction get done, right? Because you might look at the big house and go, well, there's no way I'm buying the big house because I don't want to be responsible for the church roof. You buy a policy for $1,000 that covers you if that ever gets called in, and it means you can go and buy your dream house.
Yeah, what they don't tell you, of course, is if your dream house is a big lawn, needs a big lawnmower and a lot of time spent cutting the grass. And then, Tim, we touched on data a bit. You've got a technology background. Everyone's talking about data. You've got the benefit of working with a whole range of companies and visibility into the market. I'm sure you've got something going on with data. Are you allowed to reveal a little bit of what you're doing?
Dangerous subject, Matthew. You might have to shut me up on this. We've actually built our own data platform called OneView. And so without getting into too much of the nitty gritty on it, the real concept is we've got a huge amount of data now going through the platform across 15 MGAs. And the first part is to get all that data into somewhere central where it can be used. And we've sort of got two streams on this. One is, if we can get all that data centrally, we can start delivering real value add tools to the underwriters and MGAs on our platform. This is really sort of helping them to differentiate themselves, helping them to have really grown up conversations with capacity. And a lot of these teams and individuals are spinning out of big companies where they've got huge actuarial teams and data analysis teams. And then suddenly you find yourself in this little MGA and you've raised your working capital check, which has given you your 2 years of runway, and you're focused on your product, but you don't have access to the same level of resources and capabilities. And so part of it is being able to give that data back to these teams and individuals in a way that really helps them to develop and innovate their product and add value to their relationship with capacity. And then the other side to it is the more premium we have flowing through the platform, the more grown-up conversations we can have with capacity, with reinsurers, with big backers of MGAs who are looking for that sort of portfolio approach. They're looking for that. And we're an independent platform. We're not attached to capacity in any way, but it would be a fantastic value add for our business if we were able to say to people, look, we have strategic relationships with capacity providers who buy into what we do, buy into that operating model that we give to underwriters and MGA teams, and they want to take a slice of that risk. And that all comes down to data, right? To even start those conversations, you've got to be able to sit down with these people and really have that kind of granular view of the risk that's going through your platform. We're on phase one of it. We've actually spent the last 48 hours trialing a few AI agents to allow us to real-time query that data and build analysis on the fly. We've got some really functional stuff. Some of it's for show because it looks great if someone comes into our office and we can sit there and say, right, give me a breakdown of all our exposure in Africa by country and product class, and it builds a nice graph. But ultimately, as we build this data set, huge power in that.
I can see lots of benefits of that. It's great to hear. Maybe that's a topic when we talk next time to see how that's gone. Tim, look, we've covered a lot there. Just finally, what should people remember about OneAdvent to leave them with that ringing in their ears above all else?
Yeah, fundamentally, we're an enabler, right? We work with smart people with great ideas and we help them make it happen. That's our job. It's not always that glamorous. We do a lot of the boring stuff in the background that needs to happen. But yeah, we're an enabler, and that's what we enjoy doing, is helping bring these ideas to life. Once we've got to the start line, it's then about how do we scale it and make it successful.
Great. Well, on that subject, enabling, you've been very good to us, helping us enable our MGA event. So anybody listening, you've heard the recording. Now you can see Tim on a live show on stage in a few days' time. Or, of course, the recordings of Tim on stage, I think, as well we're doing. So, really appreciate all your support, Tim. Looking forward to that panel.
We've got a great panel. Have you seen who we've got? It's all about what are the key ingredients of a successful MGA. And we've got someone representing a business that buys lots of MGAs. We've got someone from a capacity provider that backs lots of MGAs. And we've got someone who's built one of the most successful MGAs of the last 10 years. And so, yeah, I think we've got a super exciting panel. And looking forward to it.
Book now to avoid disappointment. Tim, on that happy note, I will let you go and say thank you again. Thank you very much.
Cool. Thanks, Matthew. Catch you soon.
Well, if you've made it this far, then I'm pretty sure you found that as interesting as I did. The InsurTech podcast comes out every Sunday morning, where we spotlight the latest news, leading voices, and freshest updates across insurance that you need to know about. If you would like to take part in these conversations, head to www.insurtech.co to find out how you can join our network and be a part of the insurance intelligence for the curious.